Hi, welcome to the Market Alert for Friday, the 15th of May 2020. So the US Weekly Jobless Claims that were released yesterday hit another 3 million, bringing the 8-week total to more than 36 million. That's a lot of job losses. And for me, I think we're only halfway there. As the lockdown eases and a lot of businesses don't open, then you will see this continue to rise, which is tragic, to say the least. And the market's reaction, well, you couldn't make this stuff up, could you? Let's just go back to the pre-market session first, because yesterday morning we looked at the weakness in the Dow, and this prevailed in the pre-market session. You can see the 200 MA there struggling. This was just after 7, the market moved higher. Then we got the classic retracement, another retracement back to the 200 MA, and then we just went south. And then the market had the jobless claims, which is this red bar here. And this came out at just under 3 million. And then the Dow couldn't move higher. It attempted twice, which you can see here in these 2 5-minute bars. And then eventually moved to the downside. And then something happened, and off we went. And off we went, and off we went. All the way back to and beyond where we actually started. And this is how it looked in the weekly chart, with some buying coming into the market there, or short covering, more likely to be the case, from the recent drop to the downside. So the market finding support at the 22,936, also at the 50 bar moving average as well. And overnight price is starting to move back towards the upside. So let's just have a look there. And you'll see at the moment above both the DP and the 200 MA, which are just coming into focus there. So the market currently at the previous day's high, and needs to take out the high that it's made overnight in order to continue to the upside. So there's 36 million job losses, and the market is heading back up. You couldn't make this stuff up. But as we said before, it is so manipulated. It is beyond belief to an extent. But then, hey, they've been doing it for the last, 12 years? So nothing surprises me anymore. If you can't see that there is a complete disconnect and manipulation of this market now, then you will never see it. I've talked about it for years and years and years, about the plunge protection team, the Fed's trading room, etc., and how they've used the QE money not to stimulate the economy during the last 12 years, but to again keep the bankers in the lifestyle they have accustomed to. So let's have a look at today's news. What have we got? We got European news here this morning. With Germany to start with, then retail sales for the US minus 12% is forecast. Don't forget, this is only going to count for 1 week of the lockdown. This is the March figures. I think that they were going to be. Oh no, these will be the April figures now that they're reporting. So it could come out a lot worse than minus 12. And that's it for today. But all out to 1:30, and then you've got the preliminary consumer sentiment out at 3 p.m. Medium impact 68, which again we'll see when it is released what impact it has on the market. So the implied volatility obviously dropping down yesterday as the market was brought back. Not as much as I thought it would, but then it had fair old drop in the pre-market session, only to be brought back with the wonderful, or less than worse, jobless claims figures, unless, of course, you've lost your job, and then it has a completely different connotation. Just a couple of other bits and pieces here, if I can find it. That was the headline that I didn't use this morning. I thought it was more important to see this for what it is, because it is pretty devastating. But there was another one that I was after. This was interesting because we spoke about this the other day. And again, it's the invisible hand of the Fed. And the other day it bought $305 million in ETFs in 2 days. In the first 2 days, the program was operational. The Fed purchased $305 million under the corporate credit facility It's just flaming criminal, this is. It really is. The corporate bond ETF buying program. This is to keep corporations in business by buying all of their debt. It is just criminal. It really is criminal what these banksters are doing now. And these are central banksters as well. It really does make my blood boil when you see what they're doing here, and people are going to be starving and losing their homes, and they're buying $305 million worth of ETFs when these corporations took on that risk. Staggering, but they're being bailed out. But there you go. Anyway, before I get on my soapbox and have a rant, that's about it for today. The market is continuing to do what the Fed wants it to do, and that's move back to the upside. It's a bit of a sideways range today, but it's amazing how when we got to these lows yesterday, the market was brought back. Okay, that's it for this one. If there is anything else to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.